One.
Hi, everyone. What a great day to have David Hunter. Any day is really a good day to have David Hunter with us. As far as I'm concerned, I could talk to Dave every day. David, welcome back to TradeGATEHub.
Yeah, hi, Dale. Haven't seen you in a while. Good to see you.
Well, I'm still as gray as I used to be and, still out there throwing punches and keeping my dukes up. So
yeah,
great
that's
to
why
have.
we get along so well.
Yeah, it's interesting, that tweet I put out, people started talking about market history because I said, come and check out what happens when two dinosaurs have a conversation from the tar pit. And I think just our career makes us market historians. And anyway, are you more of a T-Rex or a Brontosaurus type as far as a dinosaur?
I'll let others describe that. They probably call me a T-Rex, but
Oh yeah, okay. I'm going to be careful the rest of the interview then. So, Dave, I want to start off with the Fed. Okay, and you and I have talked about the Fed in the past, and you've had vacillating views on Powell, just as he's gone through different machinations. You've had different reactions to him, and I want your perspective as a market historian, and anyone who does cycles looks back further than their own lifetime career, right? So I have to think that the chairman, before he embarked on this tightening cycle, knew that these banks were loaded up with bonds that were paying the lowest rate since the Civil War. And Sheila Bair, who's a pretty intelligent lady, said before they embarked on it, they better watch the speed because of all the leverage in the system. Okay, so all these banks are starting to fail now. And the Fed's buddies or partners are scooping up these bonds at 10 cents on the dollar. And he was going to tighten till something broke. Well, obviously something's broke, but he still went ahead with another quarter. And this last quarter makes me think that it's intentional, actually, because he was aware that this was going to break, that all the bad paper that the banks were holding, and we could end up with maybe just a few big banks. And I think it's part of the whole story of the central bank digital currency coming, which a lot of people don't even want to talk about. You'll find it on the fringe, right, Dave?
Right.
But why isn't the digital coin called the Treasury digital currency? Because our currency throughout our history in America has come from the Treasury. This seems like a hostile takeover, that the Fed is going to be the bank with very little competition. What's your view on all this? And I'm really not a conspiracy guy, but it's starting to feel like this is part of a plan, the larger plan to implement the digital currency. What do you think?
Okay, this may take up a lot of our time.
So we have time.
Yeah, good. I am in the camp that we are, and I'll step back from the Fed. We are, without question, we are seeing a country being driven towards a new world order. And I'll take it more to the political side and say there's no question that the Biden administration and probably the Obama administration before that, that was part of their plan. So you're seeing, with open borders, with deliberate policies that are anti-competitive, anti-capitalist, policies that are going to bankrupt us with throwing money into trillions and trillions into something that at this point is still specious. I mean, climate change.
Ukraine. How about
Ukraine as well? Ukraine as well. But there's a lot of policies out there that in the past would have been called out as anti-capitalist, and they seem very deliberate. I have very little question that they are being done just by mistake.
Okay.
So I'm certainly there in terms of that biggest of all conspiracy theories that we're seeing
Okay.
this across the globe moving towards a new world order. And I've been saying for a long time, years, and this is off, where we're at, but I've been saying for a long time that new world order is code for communist takeover of the world. That's basically China and Russia running, putting us there, or driving that agenda. And that unfortunately, you have to come to a conclusion that not just Biden administration, but an awful lot of Washington are in that agenda. So what does that say about our country? Are we very compromised? Perhaps. It's the only conclusion you can kind of reach, unless they're just very innocent and dumb. But it seems we're driving ourselves towards a new world order. So then let's bring the Fed into that.
Okay.
I am not there. I've been an observer of the Fed for 50 years. I came into this business in 1973. Watched Arthur Burns, watched G. William
Volcker.
Miller, watched Volcker, watched Greenspan, etc. What they're doing, they've done every cycle. They do not understand leads and lags. They'll give lip service to it. They'll talk about the fact that the leads and lags have to be looked at, and we have to be understood and stuff. But when you look at their policies, they get caught in the present time. First of all, they're backward looking because they're data dependent. They're focused month to month on data. That by definition says they're not looking forward. They're looking at past information and assuming that it's going to extrapolate forward. I think that can answer an awful lot of the mistakes that are being made. And then you've got in a person of Jay Powell, a guy who, although he's been on the Fed for 8 or 10 years, not as chair, but has been there. He's a lawyer by training. I think he's a very bright guy. I think he picks up the concepts very well. I mean, he can articulate in his press conferences and answer questions on the fly. I think he understands a lot of that, the technical side of the Fed, but he's not a market guy. And I'll tell you, the biggest mistake that was made, and by the way, it's not really Powell, it was Bill Dudley who drove this there, is Bill Dudley convinced the Fed, convinced Powell, and Powell's convinced his governors that we got to do away with the market put. We've got to, the market has to be down a lot for us to accomplish our goals against inflation, and to get real tight policy that will drive down inflation.
Negative wealth effect.
We have to get the market down. And they made the mistake, without articulating an exact number, it was pretty easy through many, many months of speeches, etc., that they believed, I would guess, that they believed it needed to be down to 3,000 or lower on the S&P. And that was pretty much a popular narrative, right? Yeah. We were going to 3,000, 3,200. And I think Dudley may have somewhere along the line even said, may have to go quite a bit below that. So you've got a Fed, I don't know if it's unprecedented, but I wouldn't be surprised if it's unprecedented. You had a Fed targeting the market on the downside. It was almost the reverse of what they've been accused of for a long time, which is targeting the market upward, trying to drive the market higher to keep the economy afloat. So my problem with that is the stock market is probably the best leading indicator they have. Instead of using it as one of their tools, they decided they knew best where the market needed to go. That's insane. I mean, the last person I would trust to judge where the market should be valued, or where the market is going to go and should go, is the Fed.
Well, then they're 0 for 3, Dave, right? Because they were targeting real estate, and I'm reading that real estate prices are starting to tick up a little bit.
But that's a different story.
They're targeting employment, and we have a structural problem after COVID of people who left the workforce, plus a demographic problem.
Yeah,
so, go ahead.
You can have issues with the Fed, what their policy is. You can have issues with them, what they decide is important in terms of giving them signals. And I would argue labor is a very backward-looking indicator.
Right. right.
And so targeting that, you're going to be way late. You're guaranteed you're going to be way late. But you and I both know we've watched the Fed for too long. They're late.
Yeah,
They're late every cycle. What do? They go
I'm
too
early,
far.
they're late.
Yeah, me too. Yeah. So they go too far on the easing side, and then they go
Yeah,
too far on the tightening side because they are backward looking. So just to take it full circle, I still am in the camp that Powell is sincere in what he's trying to do. I've been his biggest critic going back to 2018 when he was early on as Fed chair and was making some pretty stupid remarks about targeting rates, et cetera. I was saying, you're going to create, and as you know, Christmas Eve, the famous Christmas Eve,
right.
where he reversed himself, within a week.
Yeah, with Yellen on one side and Bernanke on the others, holding hands, singing Kumbaya.
Yep. So I would,
Yeah.
as I say all the time, and I get in trouble on Twitter because people think I'm defending Powell. I'm his worst critic, but I believe he's just wrongheaded. I don't believe this is an agenda, an agenda to the extent that he does believe. He's made the statements, and I think they're not good statements, saying, we want to see hurt. We expect to see the people suffer in this because that's the only way we're going to get inflation down, et cetera.
Yeah.
Again, I think those are signs that he really doesn't quite understand the leads and lags. And I'm quite confident that what he's done already, and I've been very vocal about this for a while, he's gone too far.
He's already sown the seeds for the bust you see coming down the road.
Those are my words. I've sown the seeds of the bust, sown the seeds of deflation many times.
Okay. All right.
And that's what he's done. So
can I borrow those words once in a while?
I'm sure you do. I'm sure you've used them.
All right, let me ask you.
I'm not saying those are my words.
I know, Dave.
I'm saying I've been on Twitter 100 times saying sown the seeds of a bust.
Let me ask you this. There was a tweet I remember when the market was lower and the Fed was still in a tightening, and you actually said they're about to reach the point of no return. Do you remember?
I don't remember specifically, but
do you remember feeling that way?
Yep.
Okay, because you expressed it on Twitter, and now the market's higher, and you're saying it doesn't matter what the Fed wants; it's not going to happen. They can't take the market down. So tell us what convinced you that, and we've tightened further since you said that we might be near the point of no return, and now you don't believe, even though we're past the point of no return, we're going to return to a 6,000 S&P. What changed your mind?
Nothing's really changed because I've been saying this consistently for the last year or longer. What I said I said we could reach the point of no return. If I said that, I'm trying to recall exactly what I might have said. I probably was referring to the fact that we're going to have a bust because of what they're doing. I don't think I have ever been in the camp that said we would go down before we went up. I've been saying this for quite a while. The biggest thing, I'm a contrarian, the biggest thing driving this is what's already discounted. For the last year, sentiment has been rock bottom. It's had its, as the market moves up, it has rallies, trading sentiment moves up. But from a long-term investor standpoint, and particularly institutional investor standpoint, investors are very bearish, right? They don't see how you can go. Every rally is viewed as a bear market rally. It's not viewed as something that may be the beginning of something better. So sentiment is already showing that it's discounted in the market. I have said for a long time, I'm not trying to rationalize 6,000. I'm just saying the setup is there for the flows of money to go into the market before the disaster. I'm calling for a global bust within the next year, could start by the end of this year. So it doesn't seem rational to have the market go to extreme new highs when I'm calling for that. But what you're seeing in the economy is that the economy is more resilient than many of us might have thought.
definitely.
And whenever rates come down, it helps to stimulate housing and autos, which are the two biggest components, as well as some consumer spending.
Okay.
So, you're looking at a situation where you can have a setup where so many people are on the wrong side or on the bear side that you get some nearer term news that suggests that maybe the tightening is over, and the market can find that everybody on one side of the boat is trying to get into the market in a hurry. At the same time, it's going to be a pretty thin market. You're going to see prices move pretty dramatically. So we're in a situation that I think is rather unprecedented, which means you can have within a very short period of time, 6 or 12 months time frame, the biggest rally in history, or certainly one of them, and one of the biggest declines in history, all in the same year. You can, same 12 months.
Talk about whiplash.
Yeah, exactly. So it's not, people misunderstand. My bullishness is not coming from being optimistic about where we're going.
Yeah.
My bullishness is because of the setup that I think
it's a market event.
Yeah, it's
money flow.
It's because we also
he can't kill the animal spirit in the market.
And more than that, what we've set up is we have, I think algos contribute to this. I think the trading mentality on the street contributes to this. We have people going all in and all out. It used to be you kind of looked at things in a moderate way. Now, when people get bearish, they get very bearish. When they get bullish, they get very bullish. It's very momentum driven.
Okay. I did just read an article that counters that about since January about people being real bullish. First of all, being real bearish. If people were real bearish, would the VIX be 18, 17? And I also read that put volume in the triple Qs has dropped 75% since January. So there's not a lot of bearishness there.
Well, the contradiction there is that, because I run into this all the time, people use measures that are basically trading sentiment measures. So I'm not arguing you can't go back. There's a gap to fill at 39.70. I'm not arguing that the market can't go back there before it goes up.
Okay.
If you have what I do think you see is that any sell-off like that immediately turns sentiment back to the extreme bearish side. It
does,
right?
Yeah.
Every time we get a rally, the traders turn bullish. Every time we get a small sell-off or a pullback, the traders turn extremely bearish again and say, here we go, we're going to 3,500 or lower. So I think you have to separate out. That's why I said before, I'm talking about really the longer term underlying investment sentiment, not the trading sentiment. That'll swing around.
Okay. I wanted to ask you if you envisioned the banking crisis, which I don't think is going away. I mean, it's with us, and it's going to be with us through the bust. But did you imagine it being part of the Meltup scenario, that we were going to be seeing banks fall, and that actually could be driving liquidity and helping the market because the Fed's injecting reserves?
Precisely. Yeah. I didn't foresee exactly it was going to come out of Silicon Valley or that kind of thing. But I have said for years, really, that the global bust would include perhaps the biggest financial crisis in history. And I would then say that means bigger than 2008-9. And it would come, I at that time was focused more on the fact that it would probably come more from Europe than here, that our big banks had gotten some religion, they didn't have the kind of leverage they had back in 2008. But I don't pretend to say I foresaw the regional banking crisis that we've had. However, in hindsight, it's obviously very easy to see. And I did call them out. I made this comment many times that the tightening is a little harder to understand this time, because normally to be very tight, rates usually went above inflation, right? They had to get, so that would mean rates going to double digits or up in the high single digits. And I go, but we're a lot tighter than people realize, because it was the speed with which rates went from
Yeah.
0 to 5%.
Yeah.
And that is the story of the regional banking crisis, right? I mean, it
Yeah.
is. They got double whammy at the lows in 2020, the interest rate lows in 2020.
They loaded up on bonds.
Well, they got pumped, $5 trillion got pumped into the system. So
Yeah.
the banks said, well, we don't have loan demand to take care of that money. What are we going to do? We're going to buy the safest of all things, and we're going to buy treasuries. And because we had an extremely positive yield curve at that time, they said, well, we got to go out longer to get the returns we need. So they bought long treasuries at the exact top in the market,
Yeah.
and then got hit with a policy that was the most extreme in history in terms of the speed with which rates went from 0 to 5. So it's a perfect
Why,
storm.
it's okay to be wrong, but why did they stay wrong?
Yeah, I know. I mean, I'm not.
You know what
I'm
I
not
mean?
here. I'm not here to defend the banks.
Yeah.
They were pretty stupid. They didn't
I
hedge
think
themselves.
that, Paul said, don't worry, we have your back. They'll come back down again. I don't know. It just,
Yeah.
a guy out of college, let alone maybe a certified market technician, would have saved their banks and say, why are you still long bonds in the worst bear market in history that I've ever seen? I mean, TLT, I want to show this chart for people. This, I think, is one of the most important charts in the cosmos, Dave. If we get a breakout over 109, is it going to be supportive of the market, or do you think it's going to come with a little bit of a risk off move in the market?
Well,
I'm torn.
my long held forecast, because I've been way ahead of the street on this. I've been saying TLT will go to 200 in the bust.
Okay.
And I've been saying that for over a year. So I've also been saying the 10-year will go to 250, 260 in the next few months.
Okay.
So that tells you where I think rates are going.
Yeah,
I think
okay.
the 30-year probably goes to 290 in that period. Ultimately, I expect, and this is pretty much, I don't know who else would join me on this, maybe a few people, but I also am calling for, which is why TLT to 200, the 10-year will go to negative rates, 0 to negative rates in the bust, because they will have to flood the system with so much money, many times what they did in 2020. And I'm calling for the 30-year probably to go to a quarter or a half. So we have one more leg up in the bond market before it's a secular top that we'll never see those rates again in certainly your or my time frame.
Okay.
So, and then I believe by the end of the decade, the 10-year will be back to 15% or higher, and the 30-year as well. And short rates will be above 20% again, like the early 80s. You and I saw that. Most of the people on the street have never seen anything like that. But that is what I think we'll get as a full round trip. And what will get you there is inflation above 20%. You'll probably see 25% inflation rates.
And you made a great call on the dollar. It's pretty much been heading down. It's trying to base out here. To me, it looks like if we got over 102, we could have a bear market rally. Can you see that happening here to correct the decline?
I think it's certainly possible. My gut is that where we've been kind of here for a few months, I think this is the consolidation. I'm not sure we're going to get above 102, 103.
Okay.
And if we don't get above 102, 103, I think next stop is mid 90s, and then ultimately down to 80. So,
wow. Yeah.
So, and is that part of the conspiracy theory? I tend to think not, but it's certainly part of the bigger picture that can help it.
I mean, if we're having a dollar crisis, and Dave, I want to know if you're getting asked the same. The guys on the street, my friends, people who aren't in the business, are asking me, Dale, what should I do about the dollar? They're not traders. They don't look at euro. These de-dollarization stories are so thick right now.
Yep.
It almost seems like you're not a contrarian to be bearish a dollar right here.
Yeah, I'm not. I think that's right. I agree with that from a big picture standpoint. I mean, but I don't think we go to and I'm not sure we'll get to 80. It's a big call, but if we do go to 80, I think the conspiracy theory, or the theory that it's about de-dollarization and, another currency taking over reserve currency status, all of that will feed into it. But I think it's really going to go there more from what Powell and the Fed and the ECB and the other central banks are doing. I think it's just the dollars. I think maybe the story on the dollar of why it goes there is the precursor of the fact that what Powell is doing could go down in history, and I've said this for quite some time too, could go down in history as the biggest policy error in history. What I'm talking about, people throw around the term global bust. When I say global bust, I'm talking about
I know.
An economy that we haven't seen in the post-World War II era. It's not a depression because it'll happen fast. I'm talking about many major banks failing around the world, and certainly regional banks as well. I'm talking about the Fed having to print $20 trillion, and the ECB and Bank of Japan and even the People's Bank of China, all of them having to print proportionally similar. $20 trillion from the Fed and proportionally similar from everyone else. The reason I throw those numbers out is I think that's what will ultimately stop a free-falling financial system. If they don't do it, and they may take a little while to figure out the proportions they need, if they don't, you basically are looking at the end of the Western financial system as we know it. So they won't have a choice. It's just a question of timing of when they get started on that. But right now, what's sad, and you started out the whole discussion with this, what's sad is they're still hiking rates at a time when they should be, in past times, would have been saying, yeah, we've got a banking crisis, we got to ease up. But they are this is why I say it's not conspiracy. They are so caught up in the whole thing of looking backwards and saying, and a lot of Wall Street is along with them, saying we can't have a Fed put. We got to stop that. We can't do that again. It'd be one thing if Powell was doing this himself. Most of Wall Street agrees with what they're doing. This is wrong-headed. It's not conspiracy.
Okay, David, what a great time to introduce a digital currency during the dollar crisis. And that if people are, nervous about their dollars now, it loses 20% at your targets. All the central banks could come out and go, this is our plan to stabilize the dollar. This new currency.
That's probably my biggest fear. Not even, I don't try to factor into my forecast, but in terms of America as what it has been, and people's freedoms,
it'll be over.
If that comes, it's over. So
it's over.
So I'm not making light of that. I think that's part of, like I said, the more political side of things. I just am not sure any of the Fed policy currently is deliberately trying to move us there. Maybe I'm wrong.
Do.
Yeah, I know.
And I didn't for a long time, but now I do. Dave, I have an idea. Let's make a Dave Hunter, Dale Pinkert coin, and people could flip it, and whatever side it lands on, they're okay.
Yeah, sure.
Hey, you like that?
Sure.
Replace the dollar with that. So we're getting a little bit of a pullback in gold and silver. Gold, actually took out these highs. I'm thinking there's a chance for at least 1920 and an outside chance for maybe 1840 in the coming weeks. And silver, I'm thinking, now that we took out 24.5, just this measures to about 23 or 22. So this might be the last bus stop to get on the metals.
I think it is definitely that. I'm not sure we're going down there. That's not my expectation that we are. I'm not sure what drove silver today.
Started yesterday, and some of the miners, Dave, I think almost the miners gave the tell yesterday. I trade them, I own them. But here's a couple of the silver miners that I trade, and look at the day it had yesterday.
Yeah, where are they today? I haven't looked.
Well, you have the golds are holding up better. GDX 33. maybe pulls back to 31, 30. But I think you have to back up the truck on this next pullback in the metals and the miners.
Yeah, no,
Uh,
there's no question. I'm extreme bull on where we're going here. Anything short term, I could be wrong on. I'm not looking for the kind of sell-off you are.
okay.
But yeah, either way, I think we're very close to a big move in the metals, and they've been consolidating for the last month or two.
Yeah.
They had pretty good runs earlier in the year, so I'm not sure we need to go down there. Like I said, I don't know what's hitting silver here, but
You're constructive, copper as well. It's giving recession signals. Copper's already on to what I know there's a shortage and it takes 10 years to get a mine out, but technically it doesn't look too good. It broke down from 4 and this time it couldn't get back above it. Looks like 350 at least in copper. Is that a buying
yeah, I think
opportunity?
broaden out the chart. I think you may see more of an inverted head and shoulder than that,
A longer
but
term chart?
yeah, longer term.
Okay, sure.
But
There's
I do think this is more the end of the consolidation, not the beginning. So it can get down a
okay.
little bit further here, but I'm calling for
You still
$6
like it.
this year. And
Oh,
I do think we're going to be surprised. Part of what I think will drive the melt up, I think we are going to be surprised that if we do get 10-year down under 3%, how quickly we see housing bounce. And again, it's a bounce. I think we've seen the peak in housing for decades, but you could get a bounce in housing that's pretty good. You could get some, auto sale bounce, and all of a sudden, not that it's long lasting, but all of a sudden it could convince the street that, hey, we're not going to have a hard landing. We're not even going to have a soft landing. It looks like the economy's bottomed, and because of the banking crisis, the Fed's pausing.
done.
So
Yeah.
all of a
Not
sudden,
easing. They won't ease. They'll pause though. How long
I
do you think
agree.
they'll pause before
Yeah, I
they have
think.
to start easing?
Well, what I think is going to happen, unfortunately, which is may really be what triggers the bust, is I think if my scenario comes true and we actually see 6 or 7,000 on the S&P, given Bill Dudley's view, which is now Powell's view, you can assume that the Fed, and let's say we have some kind of a rebound in housing and some of the economy this spring, summer, you can assume the Fed will come back on the tightening side. We're not going from pause to ease. I think we're going from pause to tightening to ease.
All right,
So
you know what backs it up, Dave, and I know you're not an Elliotician, and either am I, but I just want to share it with you and your fans. It's not my call, but Ellioticians would say of the 10-year right now, one of the counts I saw is that this is a wave 4, and you get an ABC down to 3%. And wave 4 implies that there's still a 5 left to new
yeah,
highs.
yep.
So, and I don't think the market's set up to accept that, but we go down here first and then into the end of the year, we're at new highs on the 10-year.
Yeah, that's possible. It's also possible that the Fed tightens, but the bond market doesn't go with it. So you could have a deviation between the short rates and the longer rates.
Okay. Well, I'll tell you what a great discussion from a couple of prehistoric market observers.
Hey, Dale, can I talk about one more thing that
Oh,
I think
sure.
is important here?
Yeah.
And it's I for a long time was the only bear on it. I think oil is heading to low 60s very soon. And I've been saying
and
that.
Dave, I will, I know I interrupted you, but it's for a good reason. Dave was bearish up here. I remember it was on the invasion. Okay. So, and he was calling for these price levels and he's reaffirming his bearishness. So no matter what OPEC does, we're going lower.
Yeah, I think we're going to low 60s. Then we can bounce maybe back to the mid 70s or 80, but I don't think we're going much above these levels here. The levels of the last month. And then from there, I think we're, by then maybe we're heading towards 30. So ultimately, I think oil gets down to 30, 35 in the bust. If we just get this move down to the low 60s, though, short term, that takes off a lot of the inflation fear. I think people are still in the camp of thinking that the CPI is sticky and inflation's still a problem. I think the next month that may be part of the trigger for a much better market, is realizing, even the Fed realizing, hey, we got deflationary pressures here, not inflationary pressures. Oil's a big component throughout the economy. If you get it down to, if it's gone from 130 a year ago to 60, that's I don't know how you can say inflation the problem.
So then we probably don't really need uranium. You'd probably be bearish uranium too.
Yeah, I don't follow uranium, but
Yeah.
I think longer term, obviously nuclear should be a part of the story, but so longer term, it's probably a good thing, but I just don't follow it.
Yeah, you don't follow Bitcoin either, do you?
No, I don't follow Bitcoin.
Can you imagine the hard time you would get on Bitcoin on Twitter if you were a bear in Bitcoin?
Well, I did respond to somebody today that said that, matter of factly, that the NASDAQ and Bitcoin are almost 100% correlated.
Yeah.
And I said, don't be so sure. I don't follow it enough to have conviction on it, but it's not that certain.
Yeah, I'd say the charts look a bit different.
Yeah.
And David, thanks for making the difference in a lot of people's outlooks that are hearing you today. Always great to bat the ball around with you and talk markets. Thanks for having that discussion on the Fed. And I guess I am maybe a little too jaded about Jay. But anyway, that's my view. I don't think this is an accident. I think there's a lot of planning.
Yeah, there's certainly a lot of planning elsewhere, if not there. So
it bugs me that the digital currency isn't from the Treasury. No one brings it up. I mean, why? Where's the Treasury in this? It's like a takeover.
That is a good point. Yeah,
I mean, that's one of the biggest financial stories, I think, of the century, and no one understands it, and no one talks about it.
Well, there's so much that I wish people would open their eyes to, because we are moving very fast away from what you and I grew up with.
Yeah, I'm glad that we lived during the time span. We had a lot of sweet spots.
We did.
We did, and the best music, as far as I'm concerned.
Yeah, that I agree with too.
All right, Dave. Dave Hunter, everybody. Hope you enjoyed him. You can follow him on Twitter at Dave H. Contrarian, and you give him a hard time, he'll block you, and I don't blame him.
I try not to, but
no, you're patient.
When people get nasty, I just say, you don't need to follow me. I'll help you. I can unfollow you.
Yeah, shake the dust off your feet. So thanks, Dave. It was great catching up with you. Talk to you later in the summer. All right, buddy?
Yeah, enjoy your summer months.
All right.